Welcome back for another episode of Breaking Compliance with Jack and Justin. Today we have a very special addition to Breaking Compliance, Bob Brown, a legend in the banking industry. Bob is here today to talk about PPP, the latest bill that passed and the impact on financial institutions and other firms. And we're really happy to have Bob on board. Welcome, Bob.
So, Bob, can you give us a high-level overview of the Paycheck Protection Program, otherwise referred to as PPP, before we get down to our specific questions?
I'd be happy to. So this latest extension came out as part of the Economic Aid Act, and it's an extension of the Paycheck Protection Program that was enacted under the CARES Act last spring. The CARES Act did several things for the United States economy. First thing you need to understand is that the Paycheck Protection Program is a program designed to protect jobs in the United States. Even though many people think it's because it's going to small businesses, it's designed to save small businesses. The first thing it's designed to do is to save jobs. The second thing it's supposed to do is then assist small businesses get through this difficult cycle. The original Paycheck Protection Program authorized a maximum loan size of $10 million. The new program that was just enacted by Congress has dropped that to $2 million. So dramatic drop in size. They've also limited the number of employees authorized to be covered under this program. So under the previous program, it was 500 employees or less. The new program is 300 employees or less. Under the first program, you just had to justify that you had economic uncertainty that made this loan necessary to support ongoing operations. The new program requires that you document in either the first, second, or third quarters of 2020 that your earnings, your net income was down by 25% from a comparable period in 2019. The original package size for PPP1 was $659 billion. The new program is $284.5 billion. Under the first program, we had over 5 million loans issued to small businesses. The dollars that were finally granted under the program were over $525 billion. We went from less than 1,000 bank participants to over 5,400 total participants, including banks, credit unions, and other third-party lenders. It's been estimated that 51 million jobs were saved in the United States.
Now, I understand that they also very recently announced that selected community banks are going to receive 2 advance days before the free for all begins with the bigger banks and their automated systems. What will be the impact of that?
The majority of these banks are going to be manual banks that don't have automated systems in place to process these transactions. So this will allow these smaller banks to get a leg up on the larger banks before the larger banks come in with their big computer systems and really pound the SBA system with transaction volume. So it's an opportunity for small banks to get a leg up before the roof caves in, because this money could go quickly.
So, Bob, a question, because the criteria for banks or other institutions is a little bit more stringent than the first program. Now, why is that?
The Congress attempting to minimize some of the fraud that we saw. We saw examples of people buying Lamborghinis with the proceeds of their PPP loan, and that's unacceptable. There was also criticism that some very large publicly traded firms were getting funds through the PPP, including very large law firms and very large accounting firms and large manufacturing firms that obviously had no need for the PPP. So they're trying to narrow down, and there's a limited budget. So they're trying to narrow down the recipients to fit inside the package that they felt they could authorize.
Now, the program also covers loans for, I believe it's 2.5 months or 10 weeks of payroll expenses. Are there other similar programs that small businesses should consider before this period or beyond this period?
Well, the issue being similar, the big attraction of PPP is the fact that these loans can be forgiven. And I'm unaware of loans other than EIDL, which is now expired. I'm unaware of specific loan programs that can be forgiven loans. with the exception of this one. There are very low interest rate loans that extend over long periods of time, but they do carry an interest rate.
So, in terms of under what conditions will the loan not be forgiven under the program?
Typically, it's going to be in the area of fraud. And most people, they get the question, forgiveness is not a 100% all or nothing thing. So in some cases, small businesses will be eligible for lesser amounts of forgiveness if they don't fully qualify, because for maybe they laid off some people in their staff. They couldn't maintain staff at a certain level, but they still could get a partial forgiveness on these loans.
So, Bob, I guess a follow up to that. So, what's the timing? Like, how long is it going to take in financial institutions in general to get through the process and, provide all this supporting documentation and everything they need to be considered?
I would guess that most banks and credit unions are already accepting applications from their small business customers. The issue is how fast the customers can supply all the information. And then when the SBA finally opens up the window for processing, that has not been announced yet. So, and my guess is we'll only get a couple days warning when that's going to occur.
Are there a list of banks that are participating in this program, and are there any you can identify?
There's a list off of the SBA website, but again, there's 5,400 institutions out there. I mean, it is over 90% of all the banks in the United States. So it's highly unlikely you could even find a bank that's not participating, other than some of the very small banks. Most of the larger credit unions participating, and there are hundreds of third parties now that are also in the process of originating SBA loans. Just type in PPP loan origination, you'll find multiple options today in the internet.
So, Bob, another question, because this is more about the current environment. Like we know what's going on out there, how difficult it is for people, but how badly is this needed? I mean, is it really dire where people are expecting this to be one program? There could be another one down the road.
It's needed across multiple industries. I mean, a good friend of mine went into this program thinking that he would not need this loan to begin with, but he took it just as a precautionary measure. And his revenues went down every single quarter, and he will qualify with a 25% reduction in total revenues. And this has allowed him to continue to keep his staff fully employed and with their full benefits during the period of this crisis. And again, this protected 51 million jobs. I mean, the United States could not have handled 51 million more people unemployed.
So there have been many small businesses across many industries that have been shut down. I mean, for example, in Manhattan alone, 14,000 restaurants closed. In LA County, 35,000 restaurants closed. Are there certain industries in this program that may be more useful and likely to be forgiven? For example, in the restaurant industry or others?
Well, they're all going to be forgiven under the same rules. So the rules for forgiveness don't change. Now, the restaurant business and the hospitality industry, the hotels and so on, anything that has an NAICS code that begins with a 7.2, they are all going to be able to get qualified for, instead of the 2.5 months, 3.5 months of benefits under this program. So it's 3.5 versus 2.5. So they're entitled this cycle for some additional coverage. Now, they've also protected groups like the broadcasting industry, which is interesting. So they've opened up the broadcasting industry. There's special programs out there for the agriculture businesses. In the commentary, which is about 140 pages, it talks about the fishing industry. So for fishermen, so several groups were able to get in there and get special language put into the guidance under this program. And so it's important that you read this thing and see if there are special little clauses in there that just benefits you a little bit more under this program.
So, as far as the program goes, how long do you think it will take till the funds basically dry up or they're not available anymore?
Officially, it's March of this year, but I would guess that it'll be a matter of weeks before we run out of funds. I mean, the banks have all gotten, not many of the banks have gotten automated systems. They've gotten very, very good at this processing. The requirements for the processing have been reduced, so it's easier to process these loans. Most of the banks are focused initially on their existing customers, which includes their previously had customers and the customers they acquired during the first round of the PPP. People are trying to change banks may find that's a little more difficult this cycle.
So what can small businesses do right now to prepare for the next round of this Paycheck Protection Program?
If you're not already in touch with your bank, get in touch with your bank immediately and start filling out the application, start supplying all the required documentation, make sure that you have answered all the questions, because when it comes time to process these applications, those small businesses that have completed all the documentation correctly will be processed first. And those that have outstanding questions will be put to the back of the line, and they'll be handled second in most instances.
Do we expect a quick turnaround time on this, or what are we looking at on average?
We're expecting a slower turnaround than last time. The SBA has inserted an additional processing step under the old program. When the bank submitted the application, they got back an acknowledgement number that was the loan number that they could then go ahead and originate the loan under. Under the new system, they'll submit the application. The SBA will do some unspecified processing at the present time. And then at some time in the future, they will come back with this number, and the banks will have to have some new way of processing these. This is new steps for them. They're going to have to reconcile this number coming back with their outstanding loan applications and then begin to do the loan origination.
Bob, Jack and I know you're a legend. We hold you on a high pedestal. Yes, you are. But for what qualifies you with your experience to talk about this topic? I think that's important for everybody to understand, like, your background a little bit and how you can talk about this in detail.
I've been in the industry 45 years.
Mm-hmm.
I've had a myriad of positions over that 45-year time period. The last 15 years or so, I've been focused in the loan area. Prior to that, I've had an extensive technology background. And prior to that, I had an extensive payments background. I was part of the team that helped design what's now called Check 21.
Bob, this document is an extensive document with this PPP. It's not exactly the most user-friendly for most of these small businesses. Should these businesses consult other professionals before they submit their application? And if yes, who should they be talking to?
I think it's important that if they have any questions, like if there's anything that they don't understand, they should talk to their accountant or to their lawyer or to their banker. But they need to understand that it's very specific in the guidance that was just published that unless prior arrangements are made with the bank, they will not be able to get reimbursed for those expenses under the PPP. It will come out of the pocket of the small business person.
Well, thanks again, Bob. Much appreciated. That wraps it up for today on Bob's Corner. I'm Jack Ben Simon, co-founder and president of Tweezle. Thank you for attending Tweezle Talk TV. Don't forget to like, share, and subscribe.